Well, after a pretty quiet morning on Wall Street, we then saw a little bit of activity after the highly anticipated Federal Reserve interest rate announcement. They did make a decision not to touch interest rates. They didn't raise it, they didn't cut it. They're going to continue to watch economic activity. They're open to the possibility of a cut, but they didn't seem to need that right here, right now. They did successfully thread that needle. They didn't spook markets, which was a fear, and markets actually rose fairly nicely after they made that announcement. Now, we're going to take a look at how that affects all of our interest rate sensitive areas of the market, and then we're going to get into our trade application example on a healthcare stock that's largely been sideways for the last 3 months, but just today broke out to all-time highs. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's June 19th, 2019. First of all, if you're new, welcome aboard. Remember to go to YouTube, click subscribe on our channel. While you're over there, check out our description area where you can sign up for our email distribution list. We're also heavy users of Twitter. My handle is @BrandonVanZee. I would encourage you to follow me, and thank you so much for all of you that are clicking like and retweet on these Market Outlook related posts. That does go a long way and lets David and I know that you want us to continue doing these on a regular basis. And lastly, we do have a presence on Facebook as well. Feel free to join our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and dive into all the action. As you can see, I've got chart 4B pulled up here in front of us. This is our traditional 4 grid here, where we're applying the market forecast technical indicator to each of the 4 charts. The market forecast indicator is something you can find on the Thinkorswim platform or other TD Ameritrade resources, and it's these green, blue, and red lines that you see kind of below each one of these charts. Now, the background colors of the charts will tell us whether we have a bullish or bearish intermediate term posture. Kind of was going back and forth with some folks today in my swing trading class, where there we use the blue line more. That's the near term line. Remember, this background color of the chart is not changing based upon the blue line on the market forecast. It is changing based upon the green line on the market forecast. So if you're a trend trader, you're probably a little bit more going to be using that green line from an intermediate perspective. If you're a swing trader, you're probably going to be using the information you're receiving from the blue line, which is the near term line. And I suppose if you're a day trader, you could use that red line, although you'd have to be very, very quick in order to make any use out of that because it does transition so quickly. But as you can see, we do have green background colors on all 4 of our charts right now. And as I mentioned in the intro, the Russell 2000 is not only bullish, but it's also strongly bullish. And we also have the Dow Jones giving us some new indication here today as well, where we have an uptrending moving average. Notice that that moving average turned green, so we now have price above a rising moving average is what that signifies. So that's actually the first one of the 4 on the board. Dow Jones officially kind of in that path of least resistance to the upside, whereas we're not quite there on the S&P 500, but about as close as you can get. It might come as soon as tomorrow, and the same thing goes for the NASDAQ. Whereas the Russell 2000, since it only went to that strongly bullish posture today, you can see that its moving average is still clearly pointing downward. So it'll take maybe a couple of weeks, even with good market conditions, for the Russell 2000's moving average to turn around. Now, as you can see here, we did have the S&P 500 with a 0.3% gain at the end of the day. Look at how close we are to all-time highs. Right here, we're about 1% or so away from taking out this prior high, which occurred as recently as May 1st. And you can see that we've had maybe 3 up days in a row. It's possible we have a little bit of a stop and think about it for a while. A lot of times you don't just see markets go directly through a resistance point. A lot of times they'll go right up to it and kind of make traders wonder whether it's got the gumption to get through or not. And then if there's enough positive activity out there, it'll eventually get through there. And that's kind of where we find ourselves now. We're up in that resistance area, but the posture is bullish. So the expectation is that there will be a new all-time high on the S&P 500. The problem is we just don't know when that will occur. Will it happen as soon as tomorrow? Who knows? Is it going to be next week? It's anybody's guess. Right now, the assumption is that it will happen, but we do have to be mindful of the fact that resistance is there for a reason. Price has memory, and if there was big sellers selling the market right up here at these levels, which is what created the situation where the stock market fell in the first place, it's possible they'll be right back to selling at that level again. And so you're going to need that extra bullish demand to soak up any of that additional bearish supply that could be sitting there as well. The Dow Jones was up 0.15% today. NASDAQ Composite was the biggest winner of these four, up 0.42%. And then the Russell 2000 was up 0.35%. So decent days across the board. Wasn't the biggest candles or anything like that. The ranges were all quite muted, to be honest, because you can see here the label here is blue, where it says the days range, like for the Russell 2000, 8.86. That was much less than the typical range that we've been experiencing recently, which has been usually around 20 points. So, it was quiet considering the heavy nature of the day with the big announcement. But the good news is we did close a bit higher. All right, let's go ahead and take a look at some other charts here. Let's take a look at our 3 green arrows chart. And as you can see, we do have 3 green arrows across the board. I mentioned this already, but just to reiterate, we do now have price above a rising moving average there on the Dow Jones. But as you can see, we do have 3 green arrows on all 4 of these charts. I spent quite a bit of time talking about that in the last 2 evening sessions, so we don't need to belabor the point. Just know that things are going reasonably well for top-down trend traders. As we take a look here at our chart 4D now, you can see that from a longer term perspective, the only kind of difficult chart that we have right now is the Russell 2000. That's the only one that does have a bearish crossover in terms of a 10-week moving average versus a 40-week moving average, and that's why the background color of that chart is pink currently. However, the Russell 2000 has had 3 really nice weeks in a row. If I were to right-click on that and go to maximize sell, you can see that this is currently part of the 3rd straight up week for the Russell 2000, and notice that the Russell 2000 is right now not only above the orange line, which is the 10-week moving average, but it's now above the blue line, which is the 40-week moving average. So remember, the background colors change based upon the crossover of the moving averages themselves. Price has crossed over both moving averages, but the moving averages haven't crossed yet because, of course, moving averages are lagging indicators. So that could happen, by the way, as soon as next week or potentially the week after that, assuming that the Russell 2000 continues to go up at a healthy pace. That was one of the themes that we discussed in my Strategy Lab swing trading class today. For those of you that are premium market scholars that want to watch that recording, we talked about how this market in the last week or two has been led higher by low size and also momentum factors. And so this is kind of playing that out right here. You can kind of visualize that with just these candles of the Russell 2000 right there. So while we do still have that negative crossover, it is looking more and more like it could go right back on over to a bullish crossover here relatively quickly. All right, let's take a look at some 12 grid analysis now. Starting with the intermarket analysis, this will be chart 4E. As a reminder, the background colors of these charts will determine whether we have a bullish or bearish posture on the intermediate term line on the market forecast indicator. Again, that's the green line on the market forecast indicator, not the blue line or the red line. So when we look at these charts, you can see it's kind of the same 4 pink charts that we've had here this week, which is the VIX, the 10-year Treasury yield, master limited partnerships, and crude oil are the ones with bearish postures from an intermediate term perspective right now. You will see that the VIX was down pretty substantially today. It was down 5%. So that's a pretty good size move there, considering the stock market was only up about 0.3%. So anyway, hopefully those of you that are premium sellers in the options world were able to sell a lot of premium back here during these elevated VIX periods that we had that really started in earnest at the beginning of May, because that volatility has now been fading. And remember, all else being equal, if you've sold something with high volatility and now it has low volatility, you are clearing a margin in that part of your trade. Now, of course, there's price, time, and volatility to consider, but at least you've got that kind of aspect of your trade working on your behalf. As I mentioned before, because of the nature of the day with an announcement on interest rates, it's always worth looking at what's going on with the 10-year Treasury yield. You'll notice we actually slipped to multi-month lows here on the TNX today. Remember yesterday it had somewhat of a bullish day on an intraday basis, so kind of giving us a little bit of a head fake. Wasn't quite sure what to read into that, but today it's a little bit more clear that that at least the market participants are suggesting that we do have a more dovish Fed in front of us, maybe following suit of the things we've been seeing over in Europe as just one example. But the Treasury yields right now are at 2.02%. Now, to put that into context, remember, within the last year, we were at a 3% yield. We've already given up 100 basis points, and that is a massive amount when we're talking about 2 versus 3. That's like a 33% difference there. So it's quite remarkable to see the range of high to low on the 10-year U.S. Treasury yields that we've experienced in just the last 12 months. Other things to be aware of, preferred stocks really took off today. In fact, a lot of the interest rate sensitive areas did quite well. So preferred stocks took off. That was a very nice candle right there. New multi-month highs on PFF. We have close. We might even be there. Let's see. Yeah, I think we are at new highs on junk bonds as well. Notice junk bonds were up 0.51%. So JNK is now at new 3-month highs. And remember, it was just back here on, let's see, it was June 3rd that we got this little green dot to show up showing us oversold conditions. So we went from oversold conditions on June 3rd to 16 days later hitting multi-month highs on junk bonds. Pretty impressive there. We also have TLT up nicely today. We had foreign bonds, which has just been one of the most robust charts on the entire board. We've been mentioning that week over week over week for a long time now, but it continues to be the case. New multi-month highs on ticker symbol BNDX there. And then REITs did have a nice get back from yesterday. Remember yesterday I mentioned the kind of scary looking candle that we received from REITs after having such a nice move higher. We had an intraday reversal on REITs yesterday, but it was able to gain back quite a bit of that. Not all of it, but quite a bit of the REITs was gained back with their 0.54% move higher on VNQ here today. You will see that the dollar sold off a little bit. However, it's still sitting right on top of that rising moving average, and we still have a bullish intermediate posture according to the market forecast technical indicator. One really big move today was out of gold. Look at the size of that candle right there. Let me right click and go to maximize the sell so you guys can see this a little bit better. Gold has just been breaking out left and right. Now we've got a few gold positions going in these market outlook videos. I know for instance GFI is one that we've been in for some time. I've mentioned KL as well, so keep your eyes on that one. That seems to be more one of the new growth types of gold names that's out there. This is Kirkland Gold, and that one looks really strong. I believe that's all-time highs here today as well. But anyway, GLD and the gold contracts and the gold miners, everything perked up nicely after that Federal Reserve announcement here today. So if you're looking for bullish trade setups, after having the gold-related names in the penalty box for what seemed to be years, all of a sudden they seem to be breaking out now and starting to capture a lot of trader interest. Let's go ahead and take a look at our next chart setup, and this will be chart 4F. This is our foreign stock market setup now. And as you can see here, it's a bit more of a mixed bag. We're all over the board here with green versus pink charts. I would say on the whole, it did seem like we had more positive price action here today than negative price action. And that could have been aided by the fact that the US dollar was down today, as I mentioned there a moment ago. So you'll notice as you're looking at all these different charts, there was really only one that I can see. Yep, I did just verify. There's only one out of these 12, and that's India, that was down here today. It was down 0.43%. All of the other charts did have a positive day. Not all of them have bullish postures, but they did have positive days. And so, again, with that falling US dollar here today, I think that probably tended to support them a bit. But as I've been mentioning to you guys in the last couple of session, so I mentioned this both Monday and Tuesday, Russia appears to be a new leadership area from a foreign stock market perspective, and it was up another 0.13% today. That thing has just been a straight shot higher there. You can see that rapid ascent on the moving average itself there, and of course the intermediate reading right now is at 95. Remember, that can only go to 100, just to give you an idea of how strong that chart is right there from the market forecast perspective. Whereas a lot of the other charts are a little bit touch and go. Not sure what to make out of them. I did mention China yesterday because of the positive news we had yesterday regarding President Xi and President Trump. We did have a kind of a follow-through there today, and so that was good to see because that's a bit of a breakout there over the last couple of weeks. We're definitely not near 3-month highs, but at least we're at highs for the last couple of weeks, and it's good to see that after getting a couple of oversold cluster signals here just as recently as late last week. So that's what I had for you there on the foreign markets. Let's now take a look here at the U.S.-based markets. And this will be chart 4G. And before we start with this, let's go over here to the Market Watch tab real quick, and I'll show you that our biggest winner from a S&P 1500 perspective, so that's going to include more than just the S&P 500, healthcare was the number one sector here today. It was up nearly 1%. Utilities and real estate followed it up. So it did have more of a defensive, interest rate sensitive feel there in our top three here today. Whereas on the downside, we did have financials, energy, and materials. Now remember, energies and materials are very economically sensitive. Financials are interest rate sensitive, and financials generally do a bit better if interest rates are rising as opposed to falling, and so it does make sense to see financials down today and utilities and real estate up. Now from a 3-month perspective, we do have this chart 4G here to assist us, and as I mentioned yesterday, we've got a clean sweep. That was the case yesterday. It continues to be the case today, of course, with the rise of even further, stock prices, an additional day here. So not a surprise there, but nonetheless, just want to reiterate it because it's not always the case that we have, 12 out of 12 charts that are green like we have right now. So that is a fairly good sign. Now you'll notice, there are a couple of charts that might be a bit more concerning. One thing that did catch my eye was materials. We were talking about how materials look like they were launched out of a cannon here a couple of weeks back, and it's done a good job of holding the line up here. But notice that it's holding the line near a horizontal resistance area. We were not able to get up and through the prior high from April 17th. Here, at least on chart XLB. Now there are, some materials names that are doing better than others. Some of you that are in my dividend classes will know that, stocks like APD just keep on going higher, and stocks like Lin just keep on going higher. Those are your industrial gases areas within materials. But then some of the other areas within materials, some of your, iron ore stocks and different things like that aren't doing nearly as well. And so one of the things that's a bit concerning about this chart is not only is it refusing to get up and through that resistance point on XLB going back to April 17th, but then you have a candle that looks like this today. Let me right click and maximize this so you can see it a little bit better. Now this isn't a textbook setup here, but it gives you the same kind of impression. Many of you know that the shape of this candle looks an awful lot like a hanging man pattern. Now we would need a follow-up day to confirm it, and ideally you'd like the body of that candle to be a little bit smaller than the way that this one is, but you do have that long lower shadow there, and those hanging man candles generally happen up here at a resistance area. Remember, if this shape of a candle happened down here at support, that would be known as a hammer. That would actually be known as a bullish type of a setup. But up here, that generally is perceived bearishly, again, assuming we have a follow-through day to the downside tomorrow. So let's keep our eye on materials. It seems like it is maybe a little bit concerning or a precarious area right here until it can break out above that candle back on April 17th here. Otherwise, you'll notice down on this bottom rung that a lot of those more defensive and interest rate sensitive areas did respond nicely to the announcements here today. In fact, don't look now, but healthcare's back. Healthcare actually broke out to 3-month highs here today. Remember, healthcare, interestingly enough, was breaking down before the stock market itself started breaking down. Notice over here, healthcare was breaking down in middle of April. The stock market itself didn't start breaking down, and you can see that up here with SPX, really until May. That's when the SPX really started breaking down, was at the beginning of May. And so healthcare looked like it was going to be one of the leaders to the downside, but it actually stabilized nicely with this double bottom right here and ended up being a leading area to the upside in the last couple of weeks here. So remember, at the time when healthcare was breaking down, it was a political hot potato back then, as a lot of politicians were coming out and saying drug prices were too high. And I'm sure that will come back at some point, but it does seem like the conversation around the stock market has shifted from those types of politics around what's happening in the healthcare space to now what's happening with trade, what's happening with politics around the United States versus China, etc. So it does seem like the tone has shifted to a degree, and that has helped the healthcare companies kind of get out of the penalty box there. And so keep your eye on that. And, as I mentioned in the intro, our trade application here that I'll review with you in just a moment will actually come from that healthcare space. But before we get to that, real quick here on the staples, utilities, and real estate, notice that all three of those did reasonably well today. Remember, those are all big dividend-paying areas of the market. And when interest rate expectations fall, like we saw here today, that generally tends to support the share prices of those sectors on a relative basis versus some of those cyclical areas like industrials, materials, and energy, which were all down here today. All right, and real quick here over on the internet, not going to belabor this point either, because you guys have been doing a fantastic job for me this week, and I really, really do appreciate that. 115 of you stepped up to the plate last night and clicked like on Twitter, letting myself and letting David know that you want us to continue doing these on a daily basis. Remember, that's the easiest way you can get that word out to us. Take the 5 seconds every night when you watch this video. All you have to do is click like. We'll do the rest of the work there for you. If you guys can commit to doing that, we'll commit to continuing to do these videos. So thank you, as always, to that core group of you that do that every single time. It really means a lot to us. All right, let's now get into our trade application example here for the day. So for this, I'm going to come on over here to chart 4A. And I'm going to pull up ticker symbol OMCL. This is Omnicell. Now, this is a stock that many of you probably are not that familiar with. Let me go back on a 1-year daily candle chart here, just to kind of set the stage of what we're dealing with here today. Now, you'll notice we've got this high label above our candle here today. Now, in addition to getting a new high today, I thought it was also worth noting that we got a bullish posture back on an intermediate term perspective. So notice that background color did turn green here as well. So that was another nice aspect of this particular trade. But I mentioned in the intro that this stock had largely been going sideways for the last several months. And this should hopefully bring that into your vantage point here, because you can see that as I've drawn this channel on this chart here with the two black lines that you see going across the screen here, this area that it was stuck in was really first eclipsed back here in February of this year. And with the exception of what happened right here in the middle of April, with that, maybe 1 week time period right there, all the rest of the candles have really stayed right within that sideways channel that I've drawn there. You'll also notice as I draw this channel further back, it was loosely associated with this prior high up until that point, which occurred back on December 3rd. And so that concept of old resistance becoming new support here, here, and here seems to be holding true as well. Now note that this is a 1-year chart that I'm looking at right at this current moment in time, but if you were to go back on a 20-year chart or even a maximum chart, you will see that this is all-time highs that was printed today. And remember, this occurred right at the end of the day here. It barely got its head above this black line right at the close of the session there to create a breakout, right before market close right there. So When you have a sideways trending stock like this, one way to attack it is by making the assumption that the height of the sideways channel that it was stuck in prior to the breakout will be the new level of trading going forward. Now notice that if I hover my mouse over this, it says that the height right there is 7.44. So in other words, the distance between this top black line and this bottom black line is $7.44. So the theory goes that when you break out of that sideways kind of rectangle-ish type of pattern, that your upside price target would be about $7.44 above you, as it is now about to establish a new trading range for the months in front of us. And so what I thought we would do today is just a straight stock trade. This one is not the most well-known company on the planet, so I don't know how liquid its options are, but I think for this we're just going to stick nice and easy with a stock-based trade. And so what I'm going to do here is get my calculator out, and I'm going to look at a 1-for-1 reward risk ratio. So in other words, I'm going to set my stop loss. Let's set it just below this candle right here on the chart. And that is at, the low price on that candle is at 78.38. So let's set it a couple of pennies below that. 78.36 is where I'll put my stop loss. Now I do have a position sizing calculator that I use for my swing trading class, and I still have that up since we taught that class today. So I'm just going to pop that in here real quick to see where I would need that stock to go in order to then have that 1-for-1 risk to reward relationship. Notice here on the position sizing calculator, which is available for all of you premium members of Market Scholars on our resources area of our blog. But notice right here I've got that 1.0 to represent the reward risk ratio. So if my stop loss is going to be at 78.36 like I mentioned before, and my entry price is wherever this thing closed today, so it looks like it closed at 86.66, assuming we can get filled at that point first thing tomorrow morning, then you can see it calculates my 1-for-1 risk to reward ratio down below here. Now, if you have a different risk reward ratio, feel free to adjust accordingly. But for our purposes here, if we wanted to maintain that 1-for-1 reward risk ratio, then that means that our upside price target would be $94.96. Now remember, this is not going to happen here in the next week or anything like that in all likelihood. This is something that would have to be carved out over a few months potentially, just like we were stuck in this prior channel for the last few months. So let's go ahead and place that trade. I'm going to come on over here to the chart. I'm going to right click. I'm going to go to buy custom with OCO bracket, which loads up our trade down below. I'm going to lock all of these trades together by clicking that paperclip icon right there. And then I'm just going to leave this at 100 shares. Feel free to, position size accordingly. We just do these for educational purposes in a paper money account here, but obviously you're going to want to make sure that you do your own position sizing that makes sense for your own account if you take a trade like this. And I'm going to go ahead and we'll leave that in there as 86.74. So we'll give ourselves, 8 cents of wiggle room first thing in the morning, just in case it opens a penny or two above where it closed here today. But on that second line there, or the first one in red, I do want to change that to our upside price target that we calculated a moment ago, which was $94.96. I do want to come over here to the right of the limit order where it says day. I'm going to click good till cancel. Directly below that where it says day, that's associated with the stop, I also want that to be good till cancel. And then the final line item there, we're going to change that to our stop price, which I mentioned before would be $78.36. All right, so I'm going to go ahead and click confirm and send, review that one last time. Everything looks fine there, so I'll send it off, and we'll see if we can get filled first thing in the morning. All right, well, thank you for joining me here today. David should be back with you tomorrow. I think he's on the road here today, but he should be back in the saddle tomorrow night for you, and then he'll be here on Friday as well. So I won't see you till next week, so have a great weekend. I appreciate your guys' attention to these videos this week. It's been a fun week. Lots of information here that we learned today from Jay Powell as well. But, what it means for our purposes is we continue to be bullish. We have bullish postures across all 4 U.S. equity markets. If you got value out of tonight's video, as always, we would encourage you to go over to Twitter and click like on this Market Outlook related post that will be pinned to the top of my timeline. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.